Hello viewers, my name is Julius, an economic and then fiscal policy analyst. I just want to urge you to subscribe to El Bebeto TV and then media. You can catch El Bebeto TV and media on YouTube on El Bebeto TV and then El Bebeto media. On Facebook, you can catch El Bebeto on El Bebeto TV and then media. Same on IG, El Bebeto TV and then media. You can also subscribe to some of their services, which is El Bebeto Photography, El Bebeto Educational Complex, El Bebeto Graphic as well, and then photography. They are into training of IT as well. So for all your stop shop on graphics, photography, and then IT training and then media training, just subscribe to El Bebeto TV. Just hit their button and then you just receive a notification. Leave a comment in the comment section and thank you for watching. Just keep your dial on El Bebeto TV. Thank you.
Hello viewers, you're all welcome back. We will continue our discussion with Mr. Gyimah. Mr. Gyimah, can you explain to us more about the income tax and the payroll tax?
Okay, so like I said earlier in our introduction, one of the main taxes that government collect from the citizenry is the income tax. And income tax is very broad. It's a broad area, just as the indirect taxes. Now, example of some of the income taxes is the pay as you earn. Once you are employed or you are in the formal sector, you pay. The more you earn, the more you pay. So that is also deducted at source. There are other withholding taxes, withholding on goods and services and works, okay, and then primarily there is also government brought in a withholding VAT, okay, but VAT is the indirect taxes, and VAT is, let me say, the mother of all indirect taxes. Example of some of the indirect taxes: number one, obviously, is the VAT. There's Get Fund levy, NHIL levy. There's even tourism levy in the people in the hotel as well. And there's tax stamp. Okay, this one is collected on. You see, when you buy products from the shops, you see some sticker on it. Yeah. Even when you buy more, you know, this is a tax stamp for people at least to collect taxes from businesses. Okay, and then there are also excise tax. Excise tax is just a type of tax that is imposed on goods and services, but those that are harmful to, you know, human or the citizenry. So you find them on alcoholic beverages and the rest, so that people will not consume a lot of alcohol or cigarettes and all that. So that's excise. It's a form of a punitive tax, okay, just to limit people from consuming that goods and services. So those are examples of what the indirect taxes. But the mother of all indirect taxes is what? The VAT. We'll leave it there, we'll come back to it. But when we come to the income taxes, like I said, there is the payee tax, which is the income tax on individual. There is also an income tax on self-employed. There are two types of individual, whether you're in the formal sector and then if you are self-employed. It does not mean that if you are self-employed, you don't pay tax. The issue here is that most self-employed people do not pay tax. Or let me say, to pay is, for me, is kind of a big word for me, but I want to say contribute. They don't contribute to socio-economic development of the country, because as a nation and as an individual or as a citizenry, it is our civic responsibility to contribute to government's agenda. Okay, we put government there and we should give money to government. So the giving is our contribution to paying. Means it looks to me as if government has performed a certain services for us and we are paying. No, I just want us to use the term contribution, okay, because it is our civic responsibility. So when we come to the income tax, okay, we'll pick how the mechanism of it, how is individual income computed, okay, before we tax it. So the discussion is that how do we compute income or chargeable income? When it comes to the tax has its own language. That is what I want to break it down. When it comes to income tax has its language we speak. Okay, so I was explaining that there are certain languages that we speak when it comes to tax, but tax has its own languages. And I was saying that the income tax has its language. So you'll be hearing more of accessible income, chargeable income, and I will explain it. Something like total cash emolument and all that.
Tax is a whole.
It's a whole field. It's a whole thing altogether. Okay. When it comes to indirect taxes for the VAT, its language, you'll be hearing taxable supplies, taxable goods and service, supply of goods, supply of service, supply. So the indirect tax language is all about supply. So you'll be hearing taxable activity, taxable supplies, what is supply of goods, what is supply of works, what is supply of services. But because we are dealing with the income tax, let's come to the income tax. Like I said, we pay taxes on our income. And in Ghana, the sources of income is that it's either you are an individual, number one, or you are a self-employed, number two. So the categories of individual is this: those who are self-employed, and then those who are in the formal sector. Okay, then there are also businesses. So businesses also, they work, they go through their activities, whatever they are supplying, they make their profit at the end of the year, if there is. Not all the time that businesses will make profit. Sometimes they also report what losses. Or an investment. So if you are doing these investing activities, you are buying shares, you are receiving dividends from the companies, you are investing in the stock market, you are into hotel or building rentals and all that. So investing activities, you also pay taxes on it. Now, the thrust of our conversation will be on the income tax, but that's where we suffer a lot.
Yeah.
And then we should be able to look at the mechanism of how income is being computed. Like we do say, there is that thin, line between accountant and then the tax expert. Okay, yes, a good accountant can be doing your taxes for you, but not all the cases tax people are accountants. The issue here is that accountants report income or profit in a certain way, but in taxes we report profit or income also in a certain way. So let me walk us through how, or the mechanism of ascertaining what we call a chargeable income. So if the accountant will say, okay, I'm paying you your salary, that's what the accountant will say. So that's the language. But we have to, in tax, we have to, metamorphosize the basic salary.
Can you break that down? I'm not sure my viewers.
It simply means that the accountants are paid salaries.
Okay.
Raw like that. But yes, it is salaries. But the issue here is that salary has to be wired. We have to dress it. We have to pass through certain, codes to be able to arrive at what the taxman will refer to as chargeable income. Okay. So like I said, the language is that you'll be hearing more of a chargeable income, accessible income, and then total cash emolument. Okay, so the skeleton is that before you can arrive at an income to tax, whatever income, your business can pay you all the incomes that you want to pay. They can pay you all the salaries, the allowances, and everything. That is okay. So in the account, you see your basic salary plus allowances, you arrive at your gross salary or your gross income. Okay, then you pass through it through deductions, then you arrive at what? Your net pay. Then you take it, then you go. That is to the accountant. But now, to be able to compute that item called income tax on your salary, we have to, change the language from that income allowances to something that is called a chargeable income, because not all your income
is chargeable.
That's right.
Okay.
So in the tax, we will look at your income and then juxtapose it. So what we want to look at or assess is that, number one, we want to look at all your cash allowances. So the cash allowances includes your basic salary that your employer pays you plus other allowances. earned in the tax is referred to as total cash emolument. The total cash emolument simply looks at all your gains and profit from your employment. The key thing is that it is a gain, it is a profit. So it means that once you are paid, it's your profit, because at the end of the month, that is what you've worked for. And again, in addition to what you've worked for, you can happen to get other things that your employer will give to all employees, which you benefit, and that is a gain from the employment. So the first thing to arrive at is what we call total cash emolument, okay, which sums all your cash incomes. So your basic salary plus all allowances, you get your total cash emolument. Now, when you arrive at the total cash emolument, there is another income called accessible income. After arriving at the total cash emolument, the law gives us two benefits. There are two benefits which you've been worrying me about, which is, you know, sometimes you are being employed, your employer gives you fuel. Okay. So the fuel, or a car, or a vehicle, or even a driver, most businesses or most companies, they provide a driver, they provide a vehicle, they provide a fuel. So these three components to certain categories of what their staff, from the director down. Not all of them enjoy those benefits anyway, but at least the average is that most businesses allow or gives their employees fuel. So we enjoy what we call fuel benefit. This fuel is not part of your basic salary, but it's something that you earn. So that's what I said, that your total cash emolument is a gain and profit from your employment. But in addition, there's something called benefits in kind. So that benefit in kind means that, like I said earlier on, the total cash emolument is the summation of all the cash things from your basic salary plus the cash allowances. We earn certain allowances, but it is not in cash terms. So once your employer provides a vehicle for you, it's an allowance, but it's not quantified. That's right. Once they give you fuel, it's an allowance, but it's not quantified. Okay. Then if they give you a driver is a human being, it's an allowance, but it's not quantified. So once you enjoy those services, I'll just dwell on the fuel, because the fuel categories. The law says that once you enjoy the fuel, let me just introduce this. When it comes to the income tax, it is a law. You know, taxes are law. So the law that governs income tax is called the Income Tax Act 2015 Act 896. Okay, so that is the law. I have to put that on record. So whatever discussion that we are having is in the income tax. You know, tax is law, so you have to be very careful. Okay, so the fuel benefit is monies or allocations that is given to the employee as a result of what? Going to your employer to work for your employer. Now, that is a benefit in kind. Okay, now the treatment is in two ways. Sometimes the staff elect to receive the fuel in cash, everything in cash. So once you receive everything in cash, it means that we subject all your fuel allowance, which is in cash, to full tax. But the law allows, if you want to do some tax avoidance, it has given that if the fuel is being paid in kind, it means that you do the fuel coupon system, or you can, if these days, I mean, you visit the various fuel stations, you see they have the Tom card, the Gold card, and the rest. So once you do that arrangement or that negotiations and you receive that fuel, it's a benefit in kind. They will give you a card, a Tom card. You go to the fuel stations and then you buy your fuel. You don't directly receive cash. But for the purposes of cash transactions, it means that if you receive all your fuel in cash, they pay you fiscal cash. It means that we subject everything to tax. So the advantage or the avoidance is that we advise that people should take advantage and treat the fuel as what? A benefit in kind, so that a certain portion of the fuel amount will be taxed. And as we speak, the law, if you treat all your fuel in kind, it means that the law allows only 250 will be added to your total cash emolument. Like I said, I've already laid the foundation for what is total cash emolument, and I said that total cash emolument is your basic salary plus all your cash allowances, utility, rent, what have you, child education, everything, whatever allowances that the employer gives to the employee. Then in addition, if you are receiving fuel, you treat your fuel as a benefit in kind, meaning that you receive it in a coupon form or in a world card or a Tom card form. It's a benefit in kind that the employer provides. So we have to tax a certain, the law allows to tax an amount of 250. So imagine if you are receiving a fuel of 3,000 cedis, and then it is a benefit in kind. It means that only 250 out of the 3,000 is taken out to tax. But if you receive all the 3,000 in cash, you tax all the 3,000. So that is the difference. That's a lot. So to advise our viewers, our listeners, we encourage that you also encourage your employers to go into that form of negotiation and treat your fuel as a benefit in kind, so that only 250 out of the 3,000 I use as an example will be taxed. Again, there's another benefit that is called an accommodation benefit. So in the ambit of the law, there are two benefits. Okay, benefit that is accommodation under the income tax. Yes, all the discussions we are having is in the Income Tax Act. So some employers also provide accommodation to their staff. So if you have been housed, okay, or you've been given a bungalow and then all that, if the bungalow is furnished or if it is unfurnished, if it is a shared accommodation, this is also a benefit that is being given to you. Now this benefit does not come as cash, but the taxman will look at it and assess it. Okay, so the two benefits is that whether you are receiving an accommodation or you are receiving a vehicle with a driver. Now we've discussed how to treat the vehicle, that is the benefit in kind, the fuel part. Now we are looking at accommodation. Again, with the accommodation too, like you've been given a place to sleep because of or as a result of your employment, we have to tax it because it is an extra earnings you are getting, but it does not come in cash, so we won't tax everything. Okay, so the law will look at the total cash emolument that we have already computed, okay, and it will tax a certain percentage of it. Okay, so that is the position of the law. The issue here is that, like I said, once the money is being paid to you, to the accountant is salary, but in terms of getting at the tax, we have to pass it through certain areas, and that's what I'm taking as true.
Okay. So with the percentage that is being taken as tax from the income end, does it cut across with everyone in different organizations? Do we have a fixed percentage for every staff in every organization?
No, not that we have the percent. Government or the law has already set the percentage, and then if you could allow me, before we apply those percentages, we have to determine what we call a chargeable income or a taxable income, and that's what I'm building on. We can't just tax or apply all your income to the rate. No, we have to arrive at a taxable income. Like I said, the language with income tax is that we'll be talking about taxable income, chargeable income, accessible income, total cash emolument. I have developed the concept, so I've developed what is total cash emolument. Now what I'm adding on is accessible income. So now the accessible income is your total cash emolument plus the two benefits in kind, which is either accommodation or the fuel or a driver with car. Okay, once we add those two, you arrive at your accessible incomes. We're discussing how to arrive at the taxable income or the chargeable income before we can subject it to tax. Anytime an individual earns an income, you should be able to qualify the income into a chargeable one. Not all income are taxable anyway. So I introduced the concept that there are three sources of income in the country, whether you are earning your income in employment or you are self-employed doing your own business. So these are the two categories. Or you have business or businesses, that is companies, corporations and the likes, or you are also doing an investment activity. So these are the three sources of incomes, okay, according to our law. So the law qualifies all incomes into these three main areas. So we are picking on the first two, how to compute their taxes for self-employed individuals and employed or people in the formal sector. You get it? So that is the mechanics we are going through, and I explained that before we can arrive at the chargeable income, we have to first of all look at the income option for the individual, and it starts from your basic salary plus the cash allowances. Once you add these two, you arrive at what the accountant will call it the gross salary, but in the tax language we refer to it as what? Total cash emolument. Like as the English goes, it's what? Total cash. Forget about the emolument, it's total cash.
Emolument.
Yes,
I like that word.
yes, it's
Cash
emolument, exactly. So we are looking at all your cash items, that's why it's total cash. Then when we finish all your cash, we add on the non-cash, which I refer to, or the law refers to as what? A benefit in kind. So the mechanics is very simple. First of all, you pick the basic salary, you add on your cash allowances, and as for cash allowances, you can have 1,001 depending on the condition of service for the organization. There is child education, there is utility, there is rent, there is funeral, there is a whole lot.